Welcome to Finding Genius. My name is Kyle O'Brien. Today we have a very special guest, Rémy Astié, who is the founder and CEO of Vauban, which is a company that provides the infrastructure for private investments and venture capital. So, Rémy, welcome to Finding
Thanks
Genius.
for
Thanks for
having me
coming today.
today.
Yeah, absolutely. Well, I wanted to get started a little bit around your background. I noticed that your LinkedIn is conspicuously empty aside from your work at Vauban, so it's kind of a mystery to me. I would love to hear kind of where you went to school, what you studied, and then essentially your path towards founding Vauban and your work today.
Yeah, no problem. I think it's when if you don't um, overwrite it on LinkedIn, is that there's not much to talk about, I guess. No, essentially, I met my co-founder Ulrich in freshman year in uni in France. And from
Okay.
there, we kind of we built a lot of projects together. I don't want to say companies, but we built a lot of like websites and app. Um, One of them got a kind of some kind of successes in terms of users, etc. It was called Tweety. It was a personal shopper on iPhone in France, where um, basically you could kind of see how likely it was for people around you in your network to like the item of clothing that you were about to shop, etc. Because obviously when we buy this kind of goods, like what other people think about it matters a lot. um, but yeah, we spent some time on that. It was an amazing experience, like building everything, gaining users, etc. So that's when we were at uni together. But then, yeah, we decided to pull the plug on it. Like, I think affiliation business models are really hard. And to be fair, we don't
Right.
love, we didn't really love fashion either. That just wasn't for us. And actually, yeah, when we stopped, like everyone was like asking us at school, like, yeah, we never understood why you guys were doing that. You guys are so unfashionable. And, um, and then basically, so after, so that was the main one that had some commercial tractions, etc. But we really built a lot of different things. Um, and at some point, I mean, we thought we knew software really well at that time, at least, and we were like, we should probably, invest in software companies, and all of these companies which we love trying the products of, etc., which at that time were coming mostly from the US. And basically, that's when we face the problem that actually pulling, something as fundamental to being as pulling resources together, to invest them. It's
Mm.
actually really, 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 really complex, really hard. And for where we were in our lives at that time, that was basically impossible. So we didn't do it. We didn't either decided to launch Vauban right away because we didn't see that as big enough of an opportunity at that time. And we kind of moved in separate routes. So Eric, my co-founder, was studying applied math and computer science and ended up working for an insurance company. On my end, I ended up, so I wrote my master thesis on that, and I think that's how I mean, I know that's how I ended up there. But I basically ended up working for, I
Right.
think, one of the first blockchain, capital market startup. And it was an interesting space to
Okay.
evolve in, right? Like, but the very interesting thing is that I was in that space where a lot of people, me excluded, unfortunately, made a lot of money really quickly, right? And they all wanted to launch a fund when that happened. Like all of them, without an exception, at that point, they just want to become an investor, launch a fund, etc. It's like no one wants to get back to the
Yeah.
trenches. And and yeah,
Wonder why that is.
basically, when I figured that out, so Eric and I, we had a blog, a philosophy blog at that time together. So we were still, calling each other once a week or so. And I was like, I think actually a lot of people go through that journey where at some point in their life they want to become an investor. And there's no easy way to launch a fund, right? So that's when we basically resigned to, create an online way to launch an investment fund. So that's how, yeah.
Gotcha.
That's the story.
Okay, very cool. Yeah, I mean, I think a lot of people are familiar with the concept of like a special purpose vehicle, or even if they're not that deep into it, they have some
Yeah,
sense of investing. I think, 20, 30 years ago with index funds and ETFs, the
yeah,
Fidelities and Vanguards of the world popularized the concept of kind of passive
yeah,
investing. And then now with apps like Robinhood, for example, or Public or eToro in Europe, public investing is really easy. But the kind of process behind doing a private investment, so first of all, just finding the deal flow, identifying an opportunity, is really challenging. Evaluating the business is pretty challenging, and then, as you mentioned, pooling the capital, tracking the investment, and then redistributing the capital after a successful exit
yeah.
is really hard. So can you talk to me a little bit about, I mean, there's clearly an opportunity there, and that's kind of where Vauban has stepped in. What was it like before in a pre-Vauban world? Like, what is it like to actually either become an angel investor or have a small private venture fund? And how has your infrastructure radically
Yeah.
changed that
So I
process?
guess just, I mean, I don't know how sophisticated are the people listening to the podcast, but basically it's a lot of jargon, but it's pretty simple concept. It's just complex words for simple things. Like basically an investment fund, it's like it's just, pooling multiple people capital to invest in a portfolio of things, so in one or more companies. And an SPV is the same thing, but to invest in just one company. So the concept is actually really simple, and you might think that's what I used to think, that you can just ask your friends to wire you some money, like I don't know, $1,000 each, and then you're gonna invest that on their behalf, and you have that kind of handshake agreement. And unfortunately, that's not possible. There's a lot more infrastructure that kind of legally and practically
Sure.
required, and that's what we provide as an online service. So, for example, if we look at an SPV, because it's simple, it's an investment fund for just one deal, so one underlying company. What you would need to do before was you would first go to a lawyer, and you will, it would be a consulting approach, right? Like lawyers do. So you would be like, oh yeah, I want to do this, that, etc. Anyway, after the on the clock, you would probably pay at least $50,000, and what you get for that is legal documents, which are essentially the constitution of your investment vehicle. So they would say things like, who gets paid what, and that's where you would typically find like carried interest, which means that the manager, the person that brought the deal and did the work, will get 20% of the gain of of the investors, but you can get a lot more creative. But you would find other more like governance rules as well, like if an investor want to sell its stake in the SPV, what happens, etc. Anyway, once you have these documents, you need to set up the entity. So you would typically go to I mean, it's called a registered agent, I think, in the US, but it has different name in every country. But it's basically whoever actually register legal entities. Once
Yeah.
that's registered, you need to appoint like an accountant and maybe a compliance firm to process the onboardings of your investors, and you need to open a bank account. Again, like opening a bank account, you might be like, that's pretty easy, right? Like you can do it on, I don't know, Revolut, or any of these neobank where you have same day corporate bank account. But none of them actually bank investment entities, because they very high risk, very low reward for banks. So that's another nightmare that could last you for months. And then, yeah, you need to process the capital increase, and do all of the admin and do the ongoing accounting of the vehicle. So we replaced that with a very simple online platform where all of these pieces are done in the background. And I think that
Yeah.
that's what's great about us, is that it's an end-to-end product. Like it's not just It's not just a dashboard. Like it's a dashboard that actually create, legal entities and onboard the investors, etc.
Right.
So you really don't need anything else.
Yeah.
So you will arrive on the platform. You will invite your investors. They would choose how much they want to invest, or you would, give them an amount that they can invest maximum and minimum. Um, and that's basically it, right? Like you choose what company you want to invest in, you invite your investors, and anything else is sorted like banking,
Right.
registration, etc.
Gotcha. So I'm thinking from like an operator standpoint, when you're building the company from scratch, how do you get from 0 to 1? I mean, did you take that checklist that you just described to me for what it would take as an individual to set up an entity, find your accountant, get the compliance, raise the capital, and map that to kind of a SaaS product? Or were there other kind of user journeys that made sense to incorporate into the product? How did you think about that from the start?
So when we started the company, it wasn't really MVP, right? So we had a dashboard, but it was
Yeah.
not great, if I'm honest. And it was very much a front end, basically. When someone would do something, we would kind of
Okay.
do it everything manually in the background. Uh, but it's okay because I
Gotcha.
think when you start a company, you have an unstoppable energy. So you can do
Yeah.
the work of 54 accountants by yourself.
Yeah.
But that's how we got started, right? We just made sure it was, cheaper than what it would cost them to do manually, and we made sure that they had some sense of control through
Yeah.
an online platform, even though in the background everything was done manually. And the product market fit was like almost instant. Like we immediately got a lot of demand for it.
Wow.
And that's when, we took it more seriously, started onboarding more customers, raising money, etc.
Gotcha. So can you tell me a bit more about the customer base? So the product market fit came on pretty instantaneously. Who were the type of people or entities that were interested in using the service?
So when we started the company, initially we had two main businesses, which were hedge funds and venture capital. So the hedge fund part of the business, it was a lot of people that were either working for market makers or for quant hedge funds, etc. And they just wanted to be on their own, right, to launch their own small quant hedge fund. So we stopped the hedge fund, and we moved away from the hedge fund part of the business because basically we figure out that like on Robinhood or how you can do copy trading or eToro, etc. And that pretty much is going to
Mm,
replace more hedge funds. We think like it wasn't a very viable product basically for the future. So we
I
decided
see.
to move away from that to focus solely on private investments, like private markets, starting with venture capital. So in VC, we have three big group of clients. The first one, which we had our, I would say, first kind of a product market fit, or like angel investors and high net worth individuals. And yeah, they would just
Yep.
use us to, pool money to make investments, to create syndicates. Sometimes they create small funds together. And yeah, I think that's great. The second group are more established firms. So we work with, I think, a lot now of established VC firm, but also more traditional investors. And the
Hmm.
initial product market fit was to create their co-investment program. Basically, to offer very easy way to their LPs to invest in their follow-on rounds. And
Right.
lastly, we have a whole group of it's less it doesn't really have a name, but it's a mix of like small investment banks or family or small to medium sized family offices, secondaries brokers, yeah, other people that need SPVs but that are not one of these two former groups
Okay.
basically.
Okay. And do you operate primarily in Europe? I think when I first encountered Vauban, it was painted to me as the kind of the angel list of Europe. Is that how you would characterize yourself? And what are your kind of long-term visions for expanding beyond the European continent?
Yeah, I don't love the Angeles of Europe kind of. but I can understand why it's a
Yeah.
shortcut. But basically, Vauban, we're
Okay.
not Europe, like we're global. We decided to focus for the
Hmm.
first few years on everything non-US, basically, because there was no competition, which is obviously a very different
Sure.
story in the US. But at our core, we believe in a totally global future for private markets. So basically, we are the player that you would use if you have a global business as an investor, right? Like the metaphor I always use is that basically the way this business work is like dietary restrictions. So we're not like a pure restaurant that serves only steak, but we're not a pure vegan restaurant either. But we're gonna have options for everyone, and I
Mm.
think that's our edge is that you can raise from
Right.
anywhere and deploy anywhere, and it's very very powerful in this business because to go back to my jet race restrictions metaphor, if you're a group of 10 friends and one of them is vegan, like, you're not gonna go to a place that does only steak, right? That's gonna impact the decision of
Sure.
all of the group.
Gotcha. So actually, I want to pull back from the specific Vauban business model and talk more broadly around, kind of the global investment community. So to keep on your dietary kind of model here, there's a bunch of different choices. We can call it a spectrum from the, high net worth individuals to, institutional investors to maybe kind of on the lower end of the spectrum, the retail investors. With the kind of recent meltdown in public and private markets, it kind of brings up the question around, well, first of all, investing is hard, right? It's a challenging business, and it requires a lot of domain expertise and a lot of work. But recently, the playing field is open to allow more people in, which I think in the kind of traditional tech, democratizing various businesses, I think inherently there's some good there, but maybe there's also some challenges, and people who are ill-equipped to invest get involved in the ecosystem and perhaps lose out because I don't know. Crypto is a good example of that. Throwing a bunch of money in crypto because you ride this wave, and the next thing you know, your savings is gone. So I want to get your take on kind of the current state of play within like the global investment ecosystem, from angel investing to institutional investing to the kind of crossover investors and hedge funds. What does it look like to you today, and how is it changing? What is the investor of tomorrow look like?
What we've seen, but it's actually changing as we talk, as we record. But what we've seen is basically these new entrants, and I'm thinking especially about angels and syndicate. They kind of
Yeah.
replaced early stage venture capital firms in the earlier rounds, right? And if you look
Hmm.
at firms like I don't know, like Sequoia or like the big names, or like I don't know, Index in the UK, they were not actually taking as much risk as they were before, right? They were doing like mostly Series A rounds, or when they were doing seed, it was like a repeat founders, where they were happy to pay a much higher valuation. So they kind of decrease their risk appetite, and I think the main reason for that is just because they had so much capital, right? You need to invest it, and if you
Sure.
invest
Yeah.
it in
Yeah.
$1 million check at like $8 million valuation, it's just not humanly possible. And so the
Yeah.
early stage scene was almost exclusively covered by angels and syndicates. So I think that's how the whole thing played out, and a lot of and then the more hedge fund guys, they were at a later stage, even though I think there were a lot of clashes because most of traditional VC firms had growth funds, so I think there was a lot of overlap. But it seems that now everyone is moving earlier stage, I guess with the
Sure.
the pricing market corrections we've seen recently, um, I think a lot of people started to realize that valuation matters. It's like you can
Yeah.
choose the best company in the world. Like if you pay twice too much for it, it's going to divide your return by two on that deal, right? Like whatever that,
Yeah.
and uh, and so
Sure.
people are all moving earlier stage. Um, Honestly, I'm not. Basically, I think that I think investors, as an investor, you need to stick to your gun on fundamentals
Mm.
as to why that or that company is a good investment. Especially if you're a VC, you have LPs to please. So yeah, the thing is, I'm not really a macroeconomics expert, and I guess they might be up and downs, and um, investors may move, earlier or later in the food chain. But I think what we're doing, investing in tech companies, it's like, it's not going anywhere, and it's going to keep growing and growing and growing because it's not just another asset class, right? It is the future. Like, hopefully one day we're gonna mine asteroids and do crazy things like that. And we're gonna need
Yeah.
sort of capital to fuel that. So basically, however cycles play, I think they're gonna keep the money invested in venture capital is gonna, it's just gonna keep growing forever, or at least until the end of
Yeah.
capitalism or something like that. Yeah.
Whenever that may be. Um, well, you mentioned kind of this interesting future, where we're mining asteroids, for example, and that gave me some inspiration. I'm curious, to whatever degree you can disclose, of some interesting use cases on Vauban. So, for example, a group of individuals who pooled together capital to invest in a particular sector that may be underrepresented in the more traditional finance scene. Is there anything that comes to mind or any unique use cases that are particularly interesting?
So we have a lot of super super cool stuff. I think that's what one of the thing I prefer. Is probably the second thing I prefer about my job, right? And the first thing is that we work with amazing clients, and the first thing is that I get to work with an amazing team. But to give you
Yeah.
some examples, so we have a few syndicates that will basically invest in kind of specific regions and theme in Africa. So we had a few of these like very, very successful. We have a syndicate where it's a lot of people from the kind of Indian diaspora in London that invest in Indian startup, like especially linked to infrastructure.
Right.
We have a lot of syndicates that specialize to investing in crypto related companies. Obviously,
Okay.
um, we had we have actually a syndicate that invests only in space companies. I think they've done just three
Okay.
deals because there aren't that many space, space startups yet. But
Yeah.
yeah, we've seen that as well. There's another one that specializes on, anything impactful on climate change. So yeah, it's really amazing, and I think I can't talk much about it, but we're working on something unbelievable, and that got us to realize that there's no typical venture capitalist. Like you have a lot of different characters that end up into that industry. It's slightly different from, you know, I think you could characterize the Wall Street banker, right? Like, and I mean, Hollywood has done it, I think, really well. But I don't think you can do
Sure.
that
Yeah.
as easily for VCs, right? They're all sort of characters, dwelling around, and I find that pretty cool.
Yeah. Well, I think that's kind of the beauty in opening up the investor playing field to a classically underrepresented set of people, right? So, and so I guess we've talked a little bit about blockchain and your experience early on with perhaps one of the earliest blockchain projects. And I think you, if I'm not mistaken, you wrote a thesis on like clearinghouses in blockchain. One kind of core principle around DeFi or decentralized finance is the fact that everything is becoming financialized. Your social tokens, you can financialize yourself and your time. So in a way, the future, it appears that everyone in some capacity is going to be an investor, whether that's a traditional investor where you're investing in a company, or if you're perhaps raising an SPV and investing in a couple of small interesting projects. But what is the how does that look like moving forward if everyone in the world becomes an investor to some degree? Do you see Vauban servicing everyone in that capacity? Is there something adjacent to kind of the blockchain world that might creep into the sphere of Vauban's influence?
So, I mean, we really want to do everything into the private market space. So, our end goal is to,
Okay.
really bring great UX to everyone involved in the kind of private market space, whether it's, investors, LPs, and founders. Obviously, we're really focusing on LPs. I mean, we really focused on GPs, and now we're going to really focus on LPs and ship, LP specific product, etc.
Yeah.
But we have a roadmap like enormous. So there's a lot of things we're gonna ship to just make the experience, dramatically better than what it has ever been, for the
Sure.
private markets. Um, on blockchain, so we thought about it basically. I think you probably have seen. I think it's Syndicate.io that raised quite a bit of money to do basically what we do
Mm.
on blockchain, right? Um,
Yeah.
so we looked into it, and we're not really attached to funds or SPVs. Like we want to solve problems, and that's why I think internally we call them containers. Actually, we don't use actual other technical words because we really attached to solving a
Right.
problem. And if tomorrow the easiest way to do that is on the blockchain, we'll do it on the blockchain. And actually, like
Right.
if what I think is that if we're lucky to still be around in 20 years, we're probably not going to do limited partnerships, incorporated, etc. Probably it's going to be something new to that allow to pull capital. Is it going to be
Sure.
Ethereum-based syndicates? I'm not entirely sure. I think there are a few downsides to them. Like, first, I think democracy doesn't work really well for that purpose. Um, but I'm sure they're going to come up with some governance mechanism where you can, delegate more of the day-to-day management. The second thing is that I think that's what we've seen with the what is it? What's it called? The Constitution DAO. Is that
Yeah. Yeah.
it's
Yeah.
not always good that you signal your best offer to the market because it's on the blockchain, transparent. Again, I'm sure there's going to be solutions to that, but that's another problem. And the third thing is that basically I'm struggling. Um, I'm not completely sure, and I think Ulrich, my co-founder, thinks the same. But basically, we were talking about it. Should we move towards that direction? And we were like, we're not completely sure it's solving a problem. So yeah, we decided
Mm.
to, not explore that today. If we were a bigger company, we would probably have, put a team working on that. But we're a small company, so we
Right.
have to make trade-offs, and we decided to ignore that for now.
Sure. Okay. Well, this kind of series focuses on the EU, both investors and entrepreneurs, and in your case, you're almost a synthesis of the two. I mean, you're an entrepreneur that's working on tools for investors, and also what's interesting is I'm here based in Paris. You're based in London, but
Yeah.
originally from France. I'd be curious to get your take, just an overview, high level around the European tech ecosystem and why perhaps it makes sense to start a company, especially a finance-oriented company in London versus somewhere like, I don't know, Paris or Brussels or Berlin. Was there any intention behind that choice, or did you just kind of happen to land in London as a result of, I don't know, some other life choices? What's your perspective on the European tech ecosystem and specifically the ecosystem in London?
Um, I think I'm super bullish on it. Like I think Europe has, but not just the UK. I think France is a great example, but even other countries we don't talk as as much about. I think there's a you know extremely high quality of founders and engineer, and I think the capital is here too now. So I'm super bullish on it for the
Right.
next 10 to 20 years. I guess it's the only thing where there's still a little bit of uncertainty today are exit opportunities. If you want like multi-billion
Mm.
dollars exits, that either means listing in the US or getting an American acquirer. I'm exaggerating, but you need to become American of some sort
Yeah.
at some point. So I
Yeah.
think there's still that where we lose some sort of sovereignty. Um, you know, when
Mm.
you pass a certain stage. But I think, I mean, it's,
Sure.
you know, compared to where it was 5 years ago, it's 20 years, let's say, compared to where it was 5 years ago. So that's definitely a
Yeah.
beautiful exponential. Um, so yeah,
Yeah.
essentially when we started the company in London, it's just because I was here. Like, there was no political motive behind it. Um,
Sure.
However, it
Yeah.
makes
Yeah.
sense as well. That definitely took part in the decision, right? Because I
Mm.
think the first thing is obviously, to create a fintech and something finance related, London makes sense. Especially for us,
Hmm.
where we do something that's like, heavily built on common law and on general concepts that are super Anglo-Saxon. And, it would have really made sense to be based in
Right.
France to do
Right.
that. Um, the other thing, and I think London is a great place for that, is that I hope it doesn't change post Brexit, but a lot of people that work in London are not actually from the UK, and the majority of them, the vast majority, are not actually from London. And it means that it's very easy to meet new people and find investors, etc. Well, I think because in
Yep.
Paris, it's a lot of French people, it's mostly French people, so it can be slightly more cliquey. Um, and obviously,
Mm.
if you're not from the clique initially, that can make things maybe slightly harder.
Yeah.
But it's a great ecosystem too. I think it's
Sure.
just yeah, we ended up to be in London at that point, and it's a great place. We love it to build a company.
Yeah. I want to kind of close out on this idea of sovereignty, whether that's digital sovereignty or financial sovereignty. As you mentioned, Europe has grown exponentially in the past several years, but the path to a successful exit or the path to expansion always seems to point in the direction of the U.S. So I'm curious, what is your perspective on how that changes? Is it around educating kind of the youth on why it's valuable to be an entrepreneur or why it's valuable to invest? Is it a public financing? Is that kind of a part of the equation? Why do you think there's a gap in maturity, and how do we close that gap? And is Vauban potentially a part of that?
I mean, on the exit problem, I'm not entirely sure, to be honest. Because when you see who writes big check in the US, like multi-billion dollars check, it tends to
Mhm.
be mainly Silicon Valley companies, right? Like established tech companies.
Yeah,
Because they have a lot of
sure.
cash. They're not like financially regulated, so they don't have that cost of opportunity that, they can let less capital, etc., that banks or insurance would have. Um, and I guess yeah, they have just a culture where they're ready to pay a lot for a business with no EBITDA. And it's slightly different in Europe. And to be honest, if you ask me, do you see I don't know, Saint-Gobain or Carrefour tomorrow buying startups for billions, like cash, losing startups for billions? I don't think that's gonna happen. Yeah, I'm not
Right.
sure, to be honest. It's not a great answer, but it's not a great answer. But I'm not entirely sure how do we make sure there are more homegrown exit in Europe in the future. And certainly, even today, the
Yeah.
numbers, like I mean, the exit where the buyer is a European company, like the majority of them are sub $150 million.
Right. Yeah, yeah. Yeah, well, there's
Yeah.
definitely a gap to close. I guess
Yeah,
we'll see how
but
it plays out
the other
in the
angle,
coming
which
years.
probably would be the more interesting, it would be to create a attractive market to list. Um, but
Mm,
I mean, we're not there yet, right? Like, if you have the choice between, listing in the US, in the UK, or in France, like any tech entrepreneur would take the US. Like, the multiple you're gonna get is gonna be much higher. Like, it's just
sure.
yeah, but that's not my expertise. I think there are a lot of people that
Yeah,
try
yeah,
to explain why is it so shit to list in Europe, but yeah, I'm not sure yet.
yeah. Do you think there's a path for the Vauban product to bridge between private and public markets? So, like in the roadmap, 5 years from now, is it, would it be possible to, I don't know, invest in companies and then help those companies, go from seed to Series D to getting them to the public markets? I mean, could that be something incorporated into the product, or are you zeroed in on private markets, at least for the near
No,
term?
it's something we're having on the roadmap actually. It's a great spirits finger, like, yeah.
Okay. And what
So
exactly would that look like
I can't talk too
from
much
from
about
a
it, especially because it
functionality?
might change when we actually get down to the product specs, etc. But it's something in the lines of
Sure.
what you
Yeah, yeah.
mentioned.
Gotcha. Okay. Very cool. Awesome. Well, Rémy, thank you so much for taking the time today. It was a pleasure speaking with you. Very excited about Vauban and exploring it a little bit more. If you got anything else you'd like to share, anything coming up, feel free to let me know. Otherwise, we can
Cool,
close it out
awesome.
here.
Thanks, Kyle.
All right. Yeah. Thanks so much
Cheers.
for your time.